Talking about the difference between a corporation and a limited liability company. A corporation is owned by shareholders and a limited liability company is owned by members. I've been in the company formation business since 1991, and my team and I have done over 50,000 corporation and LLC filings. Both a corporate shareholder and the LLC member can be protected from liability when the company itself is sued. When a person is sued, however, the limited liability company has asset protection, so the ownership of the limited liability company can be protected from having its membership in the LLC taken away. Nevada has similar laws that apply to corporations. So one recommendation in most states when operating a business as a corporation is to own the shares of stock in an asset protection trust to help prevent the shares from being taken in a personal lawsuit. So if your company represents a brick wall, and if one of your employees hits someone with their car during work hours and your business is sued for more than your insurance covers, does that company protect you from losing your home, your bank accounts, and investments? As long as your company is set up and run properly, both a corporation and an LLC may do so. On the other hand, if you're driving out to dinner on Saturday night and the same thing happens and you're sued personally, is your business protected from being taken away from you? An LLC with more than one owner, or in Nevada and Wyoming, a one-person LLC, has provisions to protect and help prevent seizure of your business. Now, the leader of a corporation resides with the officers and directors. With a limited liability company, it's in the managers or the members. Now, officers of a corporation, for example, are the president, secretary, treasurer, and chief executive officer. Members of the board of directors typically elect and dismiss officers of the company and aren't typically involved in the day-to-day activities of the company. For the limited liability company, I often prefer the manager-managed limited liability company because the manager of an LLC doesn't necessarily have to have any ownership, and they can have 100% of the control if the operating agreement allows it. So, when they're sued personally, they don't have an asset to take. They simply have a position, manager. They can be the only signature on the bank account, can have 100% control of the company, and have little or no ownership themselves. Often a family will set up a family limited liability company. The guidelines of a corporation are in the bylaws, and in the limited liability company, they are in the operating agreement. Now, the bylaws and the operating agreement have provisions that aren't covered in the laws, such as when the officers can be elected, when and where the meetings will be held. And with a limited liability company, the operating agreement is very important because it talks about the asset protection, when the members are sued, how their interest is protected from being taken away from them in a lawsuit, etc. Now, lawsuit protection. Both the corporation and the limited liability company offer lawsuit protection. So when there is a lawsuit on the business side of the company brick wall, the owners of a corporation or a limited liability company can be protected from that lawsuit, jumping over and taking away their home, their car, their bank account, and everything they work so hard for. So, unlike a sole proprietorship or general partnership, both the corporation and LLC can provide lawsuit protection for owners when the business is sued. Asset protection, on the other hand, is when the person themselves are sued. Let's say somebody's driving on a Saturday night and they rear end somebody in their car. The assets inside the company itself can be protected if it's a limited liability company. However, the corporation's shares of stock may be taken away from that individual shareholder, with the exception of a Nevada corporation. So the recommendation, again, is if one owns shares of stock in a corporation, those shares of stock should be held in an asset protection trust. Okay, how it's taxed. The corporation by default in the United States, and we're talking about a for-profit corporation, is taxed as a C corporation. The C memory aid can be thought to be corporation because the corporation pays its own taxes. If one fills out the 2553 form, the corporation can be taxed as an S corporation, and therefore the shareholders are taxed. So the memory aid can be S for shareholders, just as a memory aid. The corporation that is an S corporation has benefits for many small business owners because the distribution to shareholders of an S corporation are not subject to the Social Security or Medicare taxes totaling 15.3%. So when one pays a reasonable salary out of the company and then pays the rest of the money out as a distribution to shareholders, for every $10,000 one pays themselves in this manner, that is, as a distribution to shareholders, that's $1,530 saved, which is the 15.3% savings on distribution to S corporation shareholders. Now, the limited liability company can be taxed in 4 ways. By default, the limited liability company in the U.S. can be taxed when there's one owner as a sole proprietorship or disregarded entity. And just as a reminder, how it's taxed and how it protects you are different. So an LLC taxed as a sole proprietorship, unlike a sole proprietorship, can protect you from lawsuit. So how it's taxed and how it can protect you are 2 separate issues. So what this means is there's no tax at the company level when it's taxed as a disregarded entity or sole proprietorship. The tax burden flows through the company to the owners, which really makes it an excellent choice to own real estate and stock market investments because the tax deductions flow through to the owners and there's no tax at the company level. A C and S corporation, on the other hand, can only have a certain amount of passive income without significant tax penalties. When there are 2 or more owners of the limited liability company, it's taxed as a partnership by default. And similar to the disregarded entity type of taxation, the tax burden flows through to the owners, so there's not a tax on the income at the company level. Now, if one properly fills out an 8832 form, the limited liability company can be taxed as a C corporation, and the way the limited liability company pays its taxes on its own income when it's taxed as a C corporation. In addition to the 8832 filing, if one also fills out a 2553 form, the LLC can be taxed as an S corporation. So there are 2 ways typically that a for-profit corporation is taxed, C and S, and 4 ways that a limited liability company can be taxed. Disregarded entity by default if it has just one owner, partnership by default with 2 or more owners, and with a simple filing or 2, an S corporation or C corporation. Now let's talk about the double taxation myth. Now I call it a myth because double taxation only applies when dividends are paid. The profit that results in the payment of a dividend is taxed at the company level, and then when the shareholder receives that dividend, that income is taxed on a personal level. So like when my mother said when I touched the hot stove, she said, "Son, I suggest you not do that anymore." The same thing for small businesses that have the option of paying dividends. It's highly recommended in most cases, do not pay dividends, so there's no double taxation. Take it from Warren Buffett. His company has a strict no dividend policy. So again, I call it a double taxation myth because one doesn't necessarily have to pay dividends in most cases. So pay a salary, which is tax deductible to the corporation, a bonus, which is tax deductible, or an S corporation distribution to shareholders, which is also not taxed at the company level. So when do you use a corporation or an LLC? Either a corporation or an LLC may be appropriate to operate an active business, such as a construction company, a barber shop, a car sales company, or an import-export business. If you intend to take your company public and sell stock, a corporation is the proper tool. Now, one may use a limited liability company to hold passive investments, such as real estate, stocks, and so on, because the deductions flow through and there's not a separate tax at the company level. So if you have further questions, feel free to give us a call at 1-800-COMPANY. That's 1-800-266-7269. you can visit us on the web at 1-800-company.com or our company's incorporated website at companiesinc.com. Thank you.